How's it going, everybody? Jake from StratGeeks coming at you with possibly a long video. I want to go over all of the trades and possible trades for Axios automation and Axios manual ideas for the whole week starting on December 1st. So first, just want to start off with showing you the strategy performance for the past 60 days, actually, because I like this trade sample size here. We got 222 trade sample size, 5,500 profit. This is with 2 micros and a max drawdown of 781. This is with a, you can pause here if you want to check that out. I do like how the long and short trades are fairly even here. And the max loser with 2 contracts is never going to be over $300 because we have a 300 tick max stop loss on all of these trades. So this is with 1 and 1. So with 1 runner and 1 set target. Let's see. So remember this, 5,500 and 781. The back tests are extremely accurate. I have yet to see a day where the strategy didn't match the live, actually. I'm sure it will happen eventually where it doesn't match, but so far, so good. We've been to run this thing for probably a month and a half now. So let's go ahead and switch from 1 and 1. So let's disable the strategy. And we'll switch position 2 to 0 and position 1 to 2. So this is going to be taking the whole trade off both contracts at the first target or the first opposite signal. Strategy performance, 60 days. We can look at 30 days as well. And you can see that did increase our profits a bit, but it also increased our drawdowns. So still a nice size bunch of trades here, 135. So, and our long and short trades are fairly even as well. I really like to see that. So it's really just a matter of preference. Do you want to get your drawdown a little? You want to have your drawdown possibly be a little bit higher and your profits be a little bit higher, or profits just a little bit lower and your drawdown be just a little bit lower? And then, also, do you want to have that possible flexibility within the automated trades to take a position off and let it run with a runner versus all at the same target? So let's go ahead and let's disable the strategy. And then what I wanted to show you folks as well is the power of the opening range and possibly setting some of these manual targets as well. So first of all, send me an email to OneTraderJake @gmail.com if you want me to send you this opening range indicator. I can email it to you. It's easier if you just send me a Discord. I'll respond a lot faster, but I do want to put my email up here as well. Let's make that 40 points. So you can send an email to OneTraderJake@gmail.com and I'll send you this opening range indicator. Also, the fastest way to get a hold of me is to go to our website, stratgeeks.ai, and then just scroll down a little bit to where Discord link. Click that link there and then send me a message, Jake@ORS, and I can send you that opening range indicator as well, and also send you the discount code for Axios. Right now, we still are waiting on the developer to add Axios to our website. Right now, we just have ORS on there, but Axios is the primary strategy at the moment. It seems to be working really well in these markets. Shoot me an email or send me a Discord message, even better, and I will send you the link to the sale right now. It's about 70% off for 3 months right now. So, yeah. All right, so let's go ahead and I just want to show you folks the power of the opening range, because we're going to be using the trades that we're going to go over here for the last week. I'm going to be using some possible targets as the top of the opening range, the middle of the opening range, maybe the bottom. But just take a gander here. Just take a gander at the opening range here on Monday. I mean, I don't have to point out that it's pretty crazy that it comes and bounces right off the middle, bounces off the top here again. And then the next day, Tuesday, I mean, bounced off the middle, bottom, rejection here, bounces off the top, middle, and it whips around in here. I mean, just, it's kind of crazy. I mean, look at it in the overnight. It just hangs on the top. Oh, it comes up a little bit here. And then we get our next day. This would be Wednesday, I believe. Rejection, tries to break out, rejection off the middle, rejection off the top, rejection off the top again. So you can see the power of the opening range here. Let's just go through the whole week just with a clean chart. Rejection off the middle, false breakout, rejection off the bottom, rejection off the middle, rejection off the middle, false breakout. Look at it just hug them. Look at it just hug the middle right there. Isn't that crazy? Hugs the top. December 5th. Rejection off the middle. Pull back here, rejection off the middle. Pull back, rejection off the bottom. Squeaks around the middle for a while. So you can see that this would make good targets for some of our trades here. And there we go. Okay, so that's secret NinjaTrader trick, by the way. A lot of people don't know this. You can right-click down in the scroll bar and click Go To. Surprising how many people don't know about this little trick. It took me a while running NinjaTrader before I found out about that. And we'll go to the first. And we'll scroll back to the beginning of the day. And we're just going to go over some trades. I'm going to take my time with this. This could be very beneficial to our current subscribers and any new subscribers that we get after this video. This could be a really good video to watch. I have made a video going over a day or two here and there, a couple shorts, but for this one I want to go over the whole week. So let's go ahead and enable Axios. And Axios is pretty cool. You can tell it to only go long. So if you wanted to only take longs, you can just click long. If you want to only take shorts, you can just click short, long and short. You can use this close all button and close all the trades on the, that are open at the same time without disabling the strategy, which a lot of strategies don't actually have that. So let's go ahead and talk about the automation first. So to get an automated trade, we need 4 things, basically. Where's a good example of an automated trade that's easy to explain? Oh, I guess this one actually is. So these red and green arrows here, these are our Axios indicator arrows. So this is the main engine behind the strategy, is this proprietary indicator that we designed. It's called the Axios indicator. So you got a smoothing period, an averaging method for ATR, which is really cool, man. This this indicator is something else. A lot of math and thinking went behind this thing. The Axios factor, whatever. Anyway, so this whole area here, all these parameters, control the red and the green arrows. And when you sign up, by the way, you get all the constant updates that we might do, optimizing updates for lifetime of the subscription, so nothing to worry about there. Right now we got it set on 2 contracts on the first position. Let's go ahead and split that up actually. Let's do 1 and 1 so I can explain kind of the full functionality. Right now we can exclude the holidays, so we're going to exclude Thanksgiving, the day after Thanksgiving, the day before Thanksgiving, because that's what I always do. And then when Christmas comes up, I'm going to probably exclude pretty much the same thing, and New Year's. And if we scroll all the way down, just want to talk about the stops just while we're in here. We have our stops set to ticks and 300. Our targets are set to swing, so we're going to be looking for the nearest swing high or swing low, depending if you're in a long or a short, for our target on the first position, and we're targeting a swing strength of 5. I do go over this in my other videos, but just wanted to go over it real quick here. Let's go ahead and enable this strategy again. Oh, we already did. Okay. So this one's a pretty easy trade to explain. So we have our Axios short signal here. And we also need, so that's number 1. And then we also need to close below the 9 moving average, which is right here. We also need, that kind of does it all at the same time here. we need to close below the 100 moving average. Now you can turn the 100 off. Right now we're using both moving averages. Actually, yeah, that's all we need. Oh, disabled on me 1 second. Sometimes it does that during backtest. Okay, so arrow down, number 1, close below moving average 9, close below moving average 100, and then we target the nearest swing. The nearest swing is right here. And then we get an entry. It looks like the entry is actually over here. The entry is actually here at the close of this candle, and we target this swing low, so which would be here for a 109 tick target. Let's go over a long. This long might be a little bit easier to explain here. Let's delete these. Okay, so this long, we close above the 100, we close above the 9, we have our green arrow, 1, 2, 3, and then we do not end up hitting our swing high. Our swing high was somewhere crazy, way up there. I don't even know where it was. It was way up there. We did not hit our swing high, but if we did have a swing high up here, say, we would have taken one position off at this swing high. Oh no, we did have a swing high. It's right here. It's just a super small swing high. It's actually right here. And we'll go over this this idea here in a second as well. And then our runner position, we hold that until we get a red arrow. So we had a 17 tick target, and the strategy was looking back here at this swing high here, which is also the top of the opening range. So that's the basics for what the strategy is doing. Pretty cool to have a strategy being able to target these swings. You can also target ATR, you can target set ticks, a lot of different things you can do with the strategy. So these are all the automated trades for the day. I wanted to show you some ideas that I have, an ongoing process of watching and theorizing on how we can also use these Axios signal arrows, the main engine behind the strategy, to snag some more ticks out of the market. I did a 30-day backtest manual the other day. It ended up helping the profits by like 20% or something. It might even help more than that depending on how you trade the manual ideas that I'm going to go over. So the first idea that I want to go over, we'll just start marking these out. So we did have a winner here. We had a loser here. You know, it might be easier for intents and purposes. Let's just go with the one position for now. We might actually end up having more profits this way, or less profits this way, but for educational purposes, I think it's going to be easier just to do two contracts at position 1. Also, what's cool about the NASDAQ Micro is with 2 contracts, the ticks equal the profit. So 50 cents a tick, 25 ticks would be $12.50. Profit times 2 is 25. So you don't have to do any math. Whatever the ticks are is exactly what the dollars are if you're using 2 micros with the micro NASDAQ, with the MNQ. Okay, so, you know, and manually, if you wanted, even if you're using 2 contracts, you could enter here, get out early. Actually, let's talk about this at first. Maybe this, because our stop loss is 300 ticks, right? Our stop loss is 300 ticks or so. It's going to be down here. It's not exact, but you get the point. 300 ticks down here. And our target on this particular trade might be a little frustrating feeling for you at only 13 ticks. So instead of taking the whole position off there, maybe you add a manual trade here at 1 contract and then hold it all the way to the red arrow and get 150 out of that, which is an idea as far as a manual goes. Or you could even look back here and be like, where could I extend? Let's use let's get rid of this actually. clean it up here. Where could I extend my target to that's not so close? Well, the next spot might be this swing high here. Oh, hold on a sec. The next spot, if it keeps doing that, I'm going to have to restart NinjaTrader. So our entry was here. We could target this swing. See this one here? We can move our target up there, and that would have been filled here for 75 ticks. That's a little more reasonable. Or we could have even targeted the kind of the conglomeration of these swing highs up here, and that would have been about 100 ticks. I like to shoot for 75 or 100 ticks when I can. And if we look back even farther, oh yeah, look, we look back even farther, we can see the opening range of the previous day, and this works often. I like to do this at the start of every trading day. I like to mark the middle of the high and the low of the previous day's range. So we could have also targeted from this entry here on our green Axios arrow, we could have targeted the middle of yesterday's opening range. We also could have targeted the bottom of yesterday's opening range, would have been 43 ticks. Better than the 18 ticks that we had there, you know. So let's leave those lines there for a second, see if they help us at all. And then the next manual idea is this. Well, let's get rid of these. Let's keep it as clean as we can. So that manual idea there, we can call that the target extension type of trade, or you can add an extra trade, and so you can do a target extension, something like that, or you can hold it till the red arrow. If we get a red arrow in the opposite direction, you have to exit the trade. So if for some reason that red arrow was way down here, then that would have been a 240 tick loss, if you will. So it's either a 300 tick stop out with these settings, or wherever that red arrow comes in, that's where you have to exit the trade. Pretty solid rules in regards to stop loss and getting out of a trade, even if it's in a loss. Or if it's if you're in profit, no matter what, you have to get out of the next Axios arrow. So the next trade I want to go over, I call the delayed entry. So, and I go over this in other videos as well. But right now we can't enter an automated trade. One second. Gotta pause here in 1 second. Okay, so we can't enter an automated trade here because we're not closing at this red arrow. We're not closing below both moving averages. If we want, though, and I've looked at a lot of these, we can wait for a close below the 9-period moving average, and we have a few different target options here. So check it out. We can target the top of the day's opening range for 77 ticks. We could target this swing, which would end up being right about here. Or, kind of my favorite, is targeting the 100 moving average as a mean reversion strategy. So you have those three options off of this red arrow right here to manually trade two contracts. And you can just set up your, I'm still calling it pulse, but you can manually set up, let's save template as Axios, save, yes. So I'd want to set up my, before I start trading, two contracts. My stop loss is always going to be 300 ticks. I might start with 150 tick profit. Save template. Save as Axios. Okay. So now I know I'll automatically have a 300 tick stop loss set. And I can just, right here at the close below the 9, I can click sell market. And I can either target, if I'm trading with two contracts, actually here you can even do this. This is actually what I would recommend. Let's add, and then do 1 and 1. So this way it'll do, actually let's do this. Let's do 100 and 200. So both of the stop losses will be set at 300 ticks. One target will be at 100, the other target will be at 200, and that way you can possibly take off. So let's save this. Axios. Okay. So this way you could have two options where you're like, all right, cool, I want to take off one position at 77 ticks at the top of the opening range, and I want to let this one go all the way to mean revert to that 100, and then you'd have a 77 and a 198. So that's the Axios delayed mean reversion entry. Again, it would basically be just the close of this candle. Simply put, close of the candle to the 100 mean reversion, especially when we're not trending hard outside of the opening range. Now we have, so this is the mean reversion, call it an MR, mean reversion trade. Then we have a classic delayed target. So we have a green arrow here. We're closing obviously above the 100, but we didn't quite close the signal candle, the Axios candle, did not close above the 9-period moving average on the signal candle. So to have this trade be automated, and now in the future we'll be making updates and trying to get this done. It might even have to be a completely new strategy to be able to get a lot of this stuff done. But for that to be an automated Axios trade, we would have need that candle to close above the 9. But because it did not, the idea with this manual is to have the close above the 100 and the Axios green arrow, but then to wait for the next candle, whatever it might be. It might be the next candle after the green arrow, could be this one, could be that one, whichever one happens to be the very next candle. And then take your two contracts, enter along here. You could shoot for the swing that was already put in. It's going to already be marked out for you. So these blue dots are the swing high here, automatically placed on the chart by Axios. And if you wanted, you could hold that other position here. It would have been better just to take both positions off at the swing there. So but you could have had a 219 and a 100. And then we get another Axios mean reversion here. Let's clean this up. At this close below. And we could target the top of the opening range. We don't quite get there. We are about, I don't know, 10, 11 ticks away. So maybe you take the profit target off a little bit early, or worst case scenario, you enter it here and you hold it and you lose 18 because no matter what, you have to get out of the trade at the green arrow if you're in a short. And then finally, we finished the day with a regular automated Axios trade, and we would enter at the close of this candle, or you could call it the open of the next candle, but I like to say it's the close of the signal candle. So here's our green arrow, and then we target our swing high, which is obviously this swing high here. So those are the ideas for Monday. And if we're going to mark them out, how would we mark them out? Because there's, a few different ideas, and in the heat of the moment trading, who knows what you'd actually do, but there's definitely some cool ideas going on here. So let's say we went conservative on this one. This one, automated. Let's say we even went conservative on this one and just took the 20 ticks, and then let's take this mean reversion. Let's stay conservative. We'll take the mean reversion just to the top of the opening range, even though you might have held it a little longer. And then let's take this Axios delay. Pretty obvious. Take that to the swing. And then let's be conservative here. Let's take this as a loss, even though most likely, if I'm trading this thing live, I'm probably going to take at least one position off at like 10 ticks. I'm not going to be able to hold it all the way to the bottom if it's especially, even after this candle sucks up like this, I might have taken that. I might have taken 100 ticks out of that, and then this one's pretty obvious. So there's Monday. Let's get the calculator out. we're trying to be as conservative as possible. We might have done better than this. Oops, I gotta spell calculator, right? Calculator. Definitely could have done better. Also could have done worse. So let's see. What's cool about this, remember, we're using 2 micros, so each one of these is just a dollar amount or so. You know, this is a rough idea of some new manual ideas to add to our automation, and the more people we can get doing this on the team, the better. Then we could have more feedback, then we could possibly look into developing Axios 2.0 with all this stuff added in, or maybe even a new strategy or set of new strategies. But it's definitely stuff to look at. So let's add this up. 26 plus 108 plus 20 plus 85 plus 221 plus 202 minus only 1 loss. So 640 ticks. Let's write this down. What did I say? 640? Oh, it's actually $640. Pretty easy. 640. 640, right? Yeah, 640. All right, now let's look at the next day. I don't care if this video is a little long. It's fine. I want to go over kind of the same way we just did, with a few different ideas, and then we'll try to be conservative with it. Look at this one. See, this would be super frustrating live. Sometimes I don't even let the strategy take these because I'm looking back. Look at how small this target was. It happened to be like right at the swing. If we could Control E again, then we can see the contracts show up. So these can be really frustrating live. And we're working with the developer right now to see if he can code us a minimum target. But right now we're having issues with it. Where would this, the nearest swing might be here. So I like to look back on the chart, like where is that swing? Oh look, there it is. So as this trade's coming up, I'm looking back there and being like, oh, that's just going to be a really small. Where could we extend it if we wanted to? Could have extended. The next blue line up is right here. See that? It's good practice to learn how to look back at these blues. So we're looking for these blue lines as targets, right? We could have extended all the way up here, would have been the next option. So it's whatever swing comes first in time. The latest, like the most recent swing high would be this one, then 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 this one. It's a little easier if you expand the chart, but you can kind of see which one's more recent here. This one, then 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 this one. Okay, so let's see how close we would have. I don't even know. We got to go way back now. Looking for December 2nd. Here we go. Oh yeah, see, that would have been way better. You could have targeted. Oh, look at perfect. Look how perfect that is. Yeah, but we lifetime updates when you subscribe. onetraderjake@gmail.com. I'll send you the link to our sale price and the opening range indicator. I'm fascinated by that. So you could have extended to the most recent swing and got 215 out of that. Of course, that's not being conservative. That's, you know, that's like very reasonable too at the beginning of the day. By the way, our trading day with this template is from 9:30 a.m. Eastern Standard Time just till midnight. Or, well, midnight for me in Bali. Just till noon, which would be right here. So this whole green window, that's our trading zone. Okay. And another trade that I've been looking at is the mean reversion to the 9, actually, because it is somewhat rare to get a red arrow above the 9. So this one I wouldn't have taken because it's too close, but you could mean revert to the 9 for 23 ticks there. And then we have a regular Axios automation here, and that's a loss. And then we could mean revert to the 9 again here at this red arrow to the 9, but geez, that's only 20 ticks. You know what I mean? Like if it was a little farther away, it might be more worth it. But what I really like here is this right here, this mean reversion delay. So this candle is our signal candle. All we need to do is wait for a close below the 9 period moving average. That's this candle. And what are we going to do? We're going to target the middle of the opening range. Be conservative with it. That's pretty cool because it doesn't actually hit the 100. I think, you know, if you got the middle of the opening range there, don't be greedy. You know, there's no need to what is that? There's no need to go for the extra 100 ticks if you already got 269, 270 out of it, you know. And then we have a regular automated trade here. Oops, let's just measure it with the automation here. Green arrow, closing obviously above the 100, closing above the 9 as well, so it's 188. And then we have a really nice mean reversion here. This one actually, the signal candle itself closes. And we're not going to target the top. It's only 18 ticks away. Definitely going to target, I mean, it's really obvious what to target here. The middle of the opening range coincides perfectly with the 100. Absolutely. Beautiful trade. Another thing that I've been looking at, we don't need to mark this one out, is after that first target here on this on the Axios signal mean reversion, if we get a candle closing below the 100 again, right here, we obviously do. It's possible, and I've seen this work often, not all the time, but it works more often than not. You could enter again, especially if it's at the middle of the opening range, because oftentimes we want to go and hit the bottom. So you could enter another trade. Maybe you just use one contract on that manually and just make $140 or something out of that. But you could definitely enter again there, but we're not going to include that in our study. Now this is a better one. This is a better 9 mean reversion. So we get our green arrow and we're going to target the 9 moving average. That's 100 ticks. Heck yeah, I'm going to go for that. And then we actually, so we'll close that trade at $100. And then we actually close above the 9. So now we can mean revert to the 100. And we mean revert to the 100 here. Or because the opening range middle is so close, you could have, if you're hardcore, you could have held it for a few more ticks to the middle of the opening range there. But we'll just leave it conservative like that for now, and I think that does it for our trading day. It does. So let's, I don't know, let's not even include this one. We could though. We could add an extra 200 ticks to this day if we wanted to. That was a pretty rule-based target extension. So we had a target extension trade here. We had a mean reversion here. We had a mean reversion short here. We could have had another breakout of the 100 here. We had a mean reversion to the 9 here. We had a mean reversion to the 100 here. I kind of want to beat this into everybody's head in some way because these trades really, really are nice. And the more people we get and the more doing it and the more feedback I get, the more likely that we're going to spend a bunch of money with a developer to get this stuff coded in. But right now I actually like the flexibility of doing this stuff live manual along with the automation. You'll never have an automated trade overlap on a manual trade. It's just the nature of how the manual trades work. So we're not going to include that extra 200 tick winner here, although we could. Let's add up the winners first. 269 plus 188 plus 305 plus 106 plus 86 minus 69 ticks loser, so 885 translates right into dollars. 885. Okay, now Wednesday is going to be pretty fast because we took a max loss on Wednesday. And you know what I really like about Axios is the max loss, even if you have, it's crazy. So this is actually a really good spot to explain this. A lot of people who are subscribed right now, it's a little bit weird trying to understand this. So you can see it says session P&L 187. But if we look at our settings, 187, well, our max loss is set to 150. How did we lose 187? The way that NinjaTrader strategies calculate max loss is the trade has to be closed. So this trade closed at $187. It's not going to just exit the trade in the middle of the trade at $150. It still has to close that trade before it can register with NinjaTrader in your account balance of what the loss was. So that could have been actually a $225 loss. But as far as the strategy goes, 150 is the magic number. It's a really, really nice. And honestly, like, we had this day on Wednesday, and I was like, cool, one trade done. I'm going to bed. Like, I'll take a day off. And as we can see, like, if we got rid of the max loss, let's just get rid of it altogether here and see what the day would have brought. Probably more losses. Yeah, just another loss. Just not a great day. What was the opening range size here? Not bad. It was just choppy, big candles, really big ATR. Yeah, I mean, how big is... Yeah, these candles are quite large. Yeah, look how big this candle is. At 10:30. Jeez. Yeah, this is... that's a little bit gnarly. Even this medium-sized candle. 185. Yeah, it's... Anyway, what's cool is, if we go back and look at the strategy performance with no max loss at all with 2 contracts, actually not too bad. Still not too bad. 5,700, 904, 144 trades. But I like playing with the max loss and keeping it as low as possible. And for some reason with Axios, we can keep it really low. Still not exactly sure why. It's really good at that. So 2 contracts. Yeah, so it could be argued that do not even have a max loss at all, but we can see here having the max loss does increase our profits a little bit, keeps our drawdown about the same. Almost a 70% win rate with 135 trade sample size in 60 days. So pretty nice. 2 contracts. All right, so we don't really have anything to do here. All we got to do is just do that. And we'll just write it up here. Minus 187. Okay, and moving right along, let's go to Thursday. Yeah, well, I mean, if you wanted to, what would you have had? You could have had a mean reversion to 9 there. That's not too great. Try not to get into these pre-market trades, but they can be, well, I mean, look at this though, guys and gals. Something to keep an eye on too, team, is like this candle here was the first candle to close below this, the 100, all the way to the arrow here. You could have started the day out with 2 contracts at 389 before the day even started and just been done with that with a $300-400 day. And if we zoom in here, yeah, that candle doesn't close below. This one doesn't close below. This candle is the first candle to close below both moving averages. Let's tighten that up a little bit. Yeah, I don't know. And then is there even a swing over here? What could have we targeted? Let's look left. I want people to get into the habit of doing this. You could have targeted, look at that, there's the bottom of the opening range there. That would have been a pretty good target. Oh, that would have been right about the same exact. Could target that, and that way you wouldn't have had some unrealized drawdown there as well. Pretty obvious target. Yeah. All right, moving on. Try to keep this video under an hour. I think this can be really beneficial for people. All right, so what do we have here? Again, you know, like another, let's get rid of this. Another idea, you know, like here's our Axios short arrow. This candle at the open, this is the first candle to close below both moving averages after the red arrow. We could have held this trade all the way till, I mean, we put in the bottom of the opening range here, and then the opening range closes here at 945. right there. See down there in the blue? It's the new version of NinjaTrader. Is pretty cool. At 9:45, then we could have actually targeted the bottom of the opening range there. Geez, I would have been done after that. Some of these can be really good. You also could have targeted the previous swing low here. These are ideas. We're not going to include this one in our study though. Would this mean reversion been worth it here? This mean to the 9? Yeah, we'll take that 44 tick. As long as it's over 25 ticks, I'd probably take it. And then we have this Axios automated loss here. This is an interesting one. This one is this really small 10 tick. If you were going to shoot for a target there, I could have seen somebody maybe shooting for a target here. And that didn't happen. Right, so you could call this one, does it get to 300? Yeah, you could call this one a full loss. If you were going to try to extend your target here, you could have had a 300 tick loss on this one. Actually, no, you wouldn't have. You would have had a, because this is our green arrow candle, you would have had a 200 tick loss on this one. Because you would have had, this is a really good example to look at. I know this video is getting long, but I think this could be really good for people to see, really get to understand the whole thing. We enter a short here, automated, and then the very next candle we get a green arrow, and we have to exit the trade here. But we did end up hitting the target, so you might not have even had a chance to extend your target. It was so close. So worst case, you know what? Actually, I don't think you would have had a chance. You really wouldn't have even had a chance to extend that target. It's definitely something that we're working on, is these minimum targets. Jeez, yeah, that's like 7 ticks. You might have had a chance. Let's count it as a loss just to be conservative, yeah? Count it as a 170 tick loss. So you would have entered here. If you would have tried to extend your target, you would have gotten stopped out at the reverse signal, and then you have a nice, oh check this out. But you would have had a stop and reverse. These are ones you got to really watch for, and you got to be right on it. So this would have been a loss, and you could have actually hit the reverse button here. Actually, no, you would have automated been out here. Well, it depends on how you were doing it, but either way, you could have had a mean reversion long here, right to the perfect middle of the opening range and the 100 both simultaneously. So you almost wipe out those losses right here with this next trade. Then we enter a regular old Axios automation here for 320 or so. This mean reversion to the 9, too close. I'm not doing a 13 tick. And then we have a mean reversion opportunity here. We don't hit the 100. We actually have to exit the trade here at this red arrow, but we do end up making 44 on that. And then unfortunately we enter this short here, and we have to exit at the green candle, which is here. Same thing. This is that. So we'll count that here. And that, oh no, we actually, see, this is another stop and reverse basically. So we would have had a mean reversion to the 100 there, 33 ticks. It probably would have extended it to the middle of the opening range to 124. 124 feels a lot nicer than 33 since our stop loss is 300 ticks. So that feels about right. Feels pretty conservative, especially adding in this loss here, which may or may not have happened, and also not taking the profits from this possible winner. Pretty obvious. That would have been pretty darn obvious. Maybe we should count that. Let's not even count it. Let's not count it. I want to be as conservative as possible, but that would have been pretty easy. We have our red arrow here. We close below both moving averages at the same time. Our market is moving. We had just opened. Easily could have just placed a target here manually for 150 ticks, but we're not even going to count that. And we're going to count this as a loss. So let's do it. Let's go. 44. So 163 plus 321 plus 44, 124. Okay, minus 133, minus 197, minus 44. 322. But could have been better than that. What did I just say? 322? 322. So 322. And then we just got Friday left. And then we'll tally up everything for the week, trying to be as conservative as possible. And you could have definitely done better. Okay, so, and again, just for idea's sake, we have our green arrow here as we're coming into the open. You could have waited for a close. The opens lately, like the pre-market, it's been like pretty, it's been moving. This wasn't even I don't even think this was a news event. Although it could have been. We'd have to look. But either way, I mean, you could have, start trading about 8:30. You could have easily taken this red arrow. It's closing below the 9 and the 100 and ridden that puppy all the way to this green arrow here for 203. We're not going to count that, but definitely something that could be done. If you're going to target a swing there, could have targeted the middle of yesterday's opening range. Yeah, that would have been a nice target. Even that would have been nice. Nice little $100 for a pre-market action. And then on the way into the market, this candle here is the first close above, and you could have targeted the 100 as a mean reversion. Right there for 242. We're not going to count that, but you definitely could have. And yeah, there's not really any trades there. And what are you going to do? Target the 100 there? 17 ticks right in the middle of the opening range? I don't think so. And at this point, you wouldn't know that this is the bottom of the opening range yet because it's not 9:45 yet till here. So who knows? Too much ambiguity here and just not knowing, and there's not enough information yet. So we definitely would have had this regular automated trade here, and you could have mean reverted to the 9 based on this red candle. It would have been a target here. Let's see what that is. 30? Yeah, we could take that. At the point of entry here, you would have thought maybe you had a chance of 76. You would have ended up with 30, but Then we have a regular Axios trade here. We don't even get up to the target here. We actually end up with a loss here. And this is another one of those stop and reverse. You got to watch these. So check it out. We have our green arrow, entry long. Then we got a red arrow. We have to exit that long immediately. And then this candle actually is the one that closes below. So we would enter a short here, and we could conservatively target the top of the opening range for 214. If you wanted to go hardcore, you could go all the way for the 100. If you want to go even more hardcore than that, you could go all the way gone for the middle of the opening range for 454. But we're going to go conservative for the back test of this week. And then you could have entered again possibly at the close below the 100, and then I don't know what you could have targeted. This is too close here. Could have targeted maybe this swing. Still seems too close. I don't know. Worst case scenario, you would have 18, whatever. We'll just won't even call that anything. This one too close. Too close to the 100. I wouldn't have taken that. I want the 100 to be farther away. I don't want to have to break through the 100 to get to the top of the opening range. That's a subtle nuance, but that's something that I wouldn't want. This is an interesting one here because I remember this live, and to target the bottom of the opening range makes a lot of sense. With Axios, we can move our targets wherever we want. They'll be plotted on the chart. So I highly, highly, highly would have recommended taking that target right there at 151 because our target was ridiculously far away at this point, especially for the time of day at 11:30. The target was way down here. 482 ticks at 11:30 with this. Look how small these candles are too. I'm not going to target 482 ticks in this market. I'd go for the 151. But, you know, if you're being really conservative, maybe you don't. Let's stick with the being conservative thing. Maybe we'll just go for 34 ticks there, even though we could have done way better than that by simply being discretionary and taking our target off at the bottom of the opening range there. Nice. We're going to keep this video under 1 hour. And then, you know, you could have mean reverted on this green arrow here. At first, we would have had a possibility of 43. And then by the time we hit our target, you would have had 26, just barely enough to make it worth it. And then here, I remember this trade too. Got to zoom in, but this candle does close above the moving average. You have to be really on top of it to see it, but we do close above. You could have been conservative and target for a mean reversion, 89 ticks, and we'll go conservative there. You also could have targeted the 100 or this swing high here for 179, but we're going to go conservative with just the 89, and that completes our day. All right, let's title this up. Yeah, this is cool. I like this hour video. Took a whole hour just to do 1 week. Whew, 85 plus 30 plus 214 plus 34 plus 26 plus 89. Enter. Minus 117. 361. All right, now let's back it up. Let's do 361 plus. It's actually going to be, Thursday. 361 plus 322 plus 322 equals, and then we got to subtract Wednesday. I already know it's like 187 or something. And remember, we're being as conservative as possible. I want to artificially inflate. Minus 187. 187 equals, so 500. And then Tuesday. Monday were really nice. Plus 885 plus. I'm telling you, the math behind these red and green arrows, these Axios arrows, is pretty sick. And then to have it automated, and then to know that you get all future updates and any optimizations that I personally do, you can just let me know and I'll give you any optimization that you want. And plus 640, plus 640. So that would have been a $2,000 week, being conservative, taking all the manual trades and all the automation combined. Pretty cool stuff. Wait, do we still have one more day? No, that was it. I thought I wrote One Trader Jake, my email up here. Did I not write my email? I'll write my email one more time. OneTraderJake@gmail.com. So please shoot me an email if you want the opening range indicator. But like I said, better yet, go to our website and join our Discord. I'm also going to put the link to our Discord in the video description. Makes it super easy. Just join our Discord. And then you can find me also on the Discord, Jake at ORS Strategy. Jake at ORS for the Discord. All right, everybody, I think that's going to be pretty much it. Let's just take one more little look-see at our Axios just by itself for 60 days. Pretty freaking cool to have that as automation. Pretty nice. 2.47 profit factor, and only a $900 drawdown, 6,300 bucks. I like 60 days right now just because the trade sample size is over 100. But even the last 30 days is pretty good. It's like about 3,000 for the last 30 days. You can take a look at it. 2,500, something like that. I don't know, actually. I have to just see. It's a little weird doing it on a Sunday because we kind of miss out on 2 days. Yeah. So it's pretty much an even month. So almost 3,000. So 25 and 25, 5, pretty much. But see, we only have 56 trade sample size. That's why I wanted to add the other month in there. But yeah, pretty good stuff. Let's go back to that 60 days. Here, I want to look at one more thing here. One sec. So for a prop firm 50K account, these are the settings that I would be using. Absolutely. Absolutely. Max consecutive winners 16, losers only 5. Max largest winning trade 573. That's really nice that it's not too big. And the largest losing trade is always going to be right around 300. I like the trades per day, 3.31 automated. Of course, adding in the manual, you get up to like 6-7 trades a day probably. Average time in market's really nice. And you could say this for the automated trades as well, probably between 6 and 15 minutes. Profit per month, 32.50. And there was a max time recover at 10 days, calendar days, which is, yeah, it's realistic. You got to stick with it. But one thing that I really like is the amount of long trades versus short trades, and how pretty even it is. It's really, really nice. Anyway, shoot me an email, onetraderjake@gmail.com for I can send you the discount code for Axios, and then also find me on Discord. Would be even easier. Just go to our website here. I'll end the video with the website, stratgeeks.ai. You can join our Discord server. Just scroll down a little bit. That's what my face looks like on the Discord, on my Discord profile. Scroll down just a little bit to the Discord link. Send me a DM. I'll send you the links and stuff, the secret sales stuff. Like I said, we're still waiting on the developer to add Axios to our website, but then we're going to have 2 strategies. Anyway, shoot me a message. Let's get in touch, and I'll talk to you guys later. Okay, bye.